Hello and welcome back to Interview 24. Today we have a very special guest, George Parisishvili, CEO, Toshkent Stock Exchange. Hello George, thank you for joining us today. Let's start our conversation from the question. We want to get information about general information capital market work. How does the capital market work and what markets does it cover? Can you give information about it?
Capital market consists of various parts. One is government bond market, where the issuer is the Ministry of Finance. And in terms of volumes, it's probably the largest market. But then there is also equity market, where stocks are traded, and also corporate bond market, where companies are issuing corporate bonds. It works the following way. Investors, they open brokerage accounts with brokers, and they place buy and sell orders on the stock exchange. And on the other side, there are sellers on the market who are willing to sell, on the market. And then also there are issuers, which means companies which are willing to issue their shares or bonds on the exchange. If you don't have issuers, then there is nothing to trade and there is no market. So it is very important for every market, including Uzbekistan's capital market, to have sufficient number of good issuers and sufficient number of investors who can trade.
Okay. What are types of securities and how do they work and differ from each other?
There are two main types of securities. One is stocks and another is bonds. Let's start with bonds. Bonds are pretty similar to bank deposits if you look at them from the investor's point of view, meaning that you are going to invest your money in a bond, you're going to buy bond, and you should expect to receive a fixed interest rate. We call it coupon. You receive a fixed interest rate every 6 months or every 3 months or maybe once a year. But the main thing is that it's fixed and you should expect to receive it regularly. So in that sense, it looks like deposit. And also, there is another similarity with the deposit, which is that it has a certain maturity date. Every bond is issued with a certain maturity. It can be 1 year, 2 years, 3 years, which means that after that period, the full amount is repaid by the issuer of the bond. And you, as an investor, you receive the full amount. It's the same as with the deposit. In the end of the deposit term, you receive the full amount, plus accrued interest. Stocks are different. With stocks, you don't have a guaranteed income, like with bonds. Stocks typically pay dividend. But this dividend depends on how profitable the company is. If company is profitable, if it had a good year, then the company may pay a dividend. And it's going to be up to a shareholders meeting to decide how much dividend will be paid. It can be half of the net profit for the last year, or it can be full net profit, or it can be fraction of that. There is also another way for investors to make money on stocks, which is on capital appreciation, on the stock price appreciation. If you are an investor and you purchase stock, you can sell it after a certain time at a profit. You bought it cheap, and after the price went up, you just sold it at a higher price, and you made a profit. That's another sort of advantage of owning a stock. And there is also the third aspect of it, which is a voting right. As a shareholder, you have the right to vote on the shareholders meeting and to effectively have your say in how companies are run. The more shares you own, the more votes you have. Therefore, the more you can influence the company's business. With bonds, it's not the same. With bonds, you don't have any voting rights. So you are effectively a creditor. Company owes you money, but you don't have a right to go to a shareholder meeting and, let's say, raise your questions or ask for certain information. It doesn't work that way. Only shareholders who own ordinary shares of a company have the voting right. Therefore, they have the right to go to the shareholders meeting, ask questions, demand certain answers, etc., etc. These are three main differences between stocks and bonds.
Okay. How citizens living in Uzbekistan invest in joint stock companies?
The easiest way for Uzbek citizens to invest in stocks is to open a brokerage account. Brokers are members of the Toshkent Stock Exchange. They are professional intermediaries who are allowed by law to accept a client's funds and to invest them in the stock market. Therefore, you as a citizen, you just go to a broker, you open an account, you then place money with them and give them an order to buy a certain stock or maybe many stocks. And they will execute your order on the stock exchange, and they will buy securities for you. In that sense, it looks pretty similar to opening a bank account. Brokers are asking for the same types of documents, and they, after they open a brokerage account for you, then you are free to trade.
Who are the main participants of the market, and what is their role in this process?
The main participants, we should also differentiate between the buy side and sell side participants in the market. The buy side participants are the ones who are investors. These are private individuals or companies or pension funds or insurance companies, mutual funds, banks sometimes. They are the ones who buy securities. And there are also sell-side firms like brokers who are providing so-called execution services on the stock market. Brokers are the ones who work with clients, who accept client orders and execute them on the stock market. So the market always has buyers and sellers. But there is also another aspect to it. We should not forget that there are also issuers. Issuers are the companies who are willing to issue their shares or bonds on the market. If you don't have issuers, you don't have securities traded on the market, and then you have no market. So it is absolutely important to have issuers, good quality issuers in the market, and also investors who are willing to buy securities issued by those issuers.
What is the difference between stock exchange, currency exchange, and commodity exchange?
There is a significant difference. On the stock exchange, we trade stocks and corporate bonds. On currency exchange of Uzbekistan, the foreign exchange operations are conducted. In other words, banks are buying and selling for currency on the currency exchange, and also government bonds are issued and traded through Republican currency exchange. And on a commodities exchange, you have none of these, but you have trading of commodities, physical goods that can be bought or sold on the commodity exchange.
Why should joint companies issue shares and bonds, since it's also possible to get capital by taking a loan from a bank?
Taking a loan from a bank is the traditional way of financing by companies, utilized by companies. The only problem with the bank loan is that banks are sometimes limited with the amount that they can lend to a particular borrower. And also, if you are only financing your business with the bank loans, then you don't have much diversification of your funding sources. So basically, you rely on one or two or maybe even more than two banks for your financing. If you are a fairly large company, that may not be enough. You may need more financing needs, and banks may not be able to support you, again, because they have certain limits, etc. Or they might think that your business is a little bit too risky for them. Let's not forget that banks are very conservative financial institutions. So there is an alternative for a company to raise financing, which is through a capital market. So the company can issue stocks or bonds and raise money in that way, which means that they will be diversifying their funding base. They will not be reliant on banks only, because they can effectively get money from investors from all over the world, because on the stock market or on the bond market, all investors are welcome to participate. Local, foreigner, private individuals, companies, like I said, institutional clients like mutual funds or pension funds. So it's a much more diverse set of investors that you are going to get on the capital market than when you just, again, are borrowing from the bank.
Mr. George, you have also been in Economic Forum, which was held in Samarkand, and can you give information about the reforms which was related to stock exchange? Also, other reforms planned to establish.
The biggest announcement which was made not only on the Economic Forum but even before was that the government is planning to privatize large state-owned companies through IPOs on the Toshkent Stock Exchange. We're talking about 21 large companies, some of them are banks, state-owned, and the government is willing to sell those companies to private investors to reduce the government stake in those companies. And again, good thing is that they are going to do it through the IPO, initial public offering, or SPO, secondary public offering, on the Toshkent Stock Exchange. We look forward to welcoming all these companies to our exchange. We hope that there will be many more stocks or bonds traded on the on our market, which will increase liquidity, increase participation of investors in our market. We hope to see many more foreign investors participating in our market, which is going to create good trading volumes on the stock exchange.
This was our last question. Thank you for your time. Wish you all the best. Today we have a conversation with George Parisishvili, CEO of Toshkent Exchange. Stay our channel. Have a nice day.